Hey guys, Norm from Bear Bull Traders. It's Wednesday, November 28, 2018. Quick recap for today. It was a wild day in the markets. The open was as choppy as you could ever imagine. In retrospect, Robert H. called it out. So we knew Jerome Powell, the Fed chair, was going to talk at the New York Economic Club or Economic Club in New York at noon. So this morning, Robert called it out after it had happened. Well, no wonder it was so choppy. All the big money was waiting on the sidelines to see what was going to happen once he spoke. It was a huge speech. If you look back 6-8 weeks ago when this whole downtrend bear market correction started, a lot of it had to do with him saying that they were willing to overshoot their target rate, which essentially meant that they were okay with the economy slowing down considerably. So anyway, when that speech happened, I had a few trades this morning. I was sitting on an Apple trade. I was already well into the money. It's not that interesting, so I'm not going to highlight that one here. It's just this one trade I'm going to pick out and show. So the whole market, you can see here, the SPY, if I pull it up, SPY had been choppy all morning. Wasn't really doing much, chopping back and forth. It was a tough day to trade. A lot of people were in the red. Right at noon, when the speech itself was released, the market just spiked. He kind of corrected his language and said that they would be more interested in the data that came in, not just raise rates arbitrarily. So anyway, Apple followed the SPY pretty much. At one point, it started coming back down. I had this daily level, and it just shows these levels. Early in the morning, I took a trade. It bounced off a 2 days ago high. The levels that we mark on our charts are extremely important. It's boring as can be at 45 minutes before the open, but when you come in and look at the gappers list to sit down and mark those, and obviously 2 days ago high, DAS already put that on there for you, but these daily levels are extremely important too. So this 178.90 level I had on my chart, keep in mind those can be a few cents off. They can, it's a rough level. Apple had been downtrending a bit, and then it hit this level, and I was kind of looking to see if it might reverse. I thought it might go strong into the close in case traders wanted to swing it for a little bit of time. Another thing to keep of note is, big money funds have a lot of them have lost money this year. So they're looking for a way to make profits by the end of the year. We've had a big correction. Apple, for example, was at 220 just 6-8 weeks ago. It was the $1 trillion+ market cap, and it lost so much of it. So people are looking for something to happen with that, and maybe make some money before the end of the year, before they have to report to their clients and make them look better. Santa Claus rally, that's where it comes from. So anyway, that having been said, I was waiting to see if a reversal might happen here. It had been following the moving averages here. You can see on the 1 minute chart. I had the 200 moving average here on the 1 minute. I had the daily level of 178.90. I was keeping an eye on it. When I saw this bounce off this level, form this hammer doji on the 5, and then on the 1, it started to come back up and test this 9 moving average and go above it. I thought I'd give it a shot. It was 179.22. My stop would have been just below this level here, so right around 179. So I had about 20 cents to the downside, and I thought it might run into the close, hit 180. Sure enough, started to run. This was a hotkey error, and just briefly, hotkey errors happen. I mean, most of the time it's either taking the wrong size or going the wrong way in a trade. You want to go long and you accidentally hit the short hotkey because you're not staring at it. And the rule I have for that is no matter what, immediately get out of it. So this was the exact opposite, because I mean, if you think it's a long and you hit a short, there's no reason to be in that trade. Just take the loss of a dollar or two commission, whatever it is, and maybe a couple cents on the trade. Not a huge deal. So instantly that went through my mind, and I've never had to do it on something like that where I accidentally fully exited a trade I was already in, but I was still confident in the trade. So I was like, oh hell, called it out in the chat room. I was actually on the mic at the time. I called it out. I bought back the exact same size position. It actually gave me a 1 penny better entry because just the slippage at that point, or the gyration in the trade. It continued up on this 9. I was going to hold it in the close. I'm not going to hold this position overnight. It was not a swing trade. And another rule, if it's going to be a day trade, you close it before the end of the day, before 4 o'clock. So anything can happen here. You can have profit taking. We were up close to 5% at this point in the day. You could have profit taking or whatever take over. And so once it got up here, I took a partial. I took my first half off just under 181. I believe it was 180.96. And then I started to see this come down right here. Test this 9. And like I said, there were only a few minutes left to the close. It could have just kept going down. I was in a good spot anyway, so I went ahead, took the rest off right there. In retrospect, it did exactly what I thought. I thought it might try 181 after it passed through 180. It did just that, but oh well. You're green on a trade, be happy with it, and go on about your day. So anyway, thank you for watching. Please be safe in your trades, and I'll see you in the chat tomorrow morning. Take care.